Hey traders, welcome to another lesson of um, Fibonacci Updated for the Traders Toolbox to Profits. And in this lesson, I'll be doing a quick review on how to use a Fibonacci, basically where to wait with the Fibonacci, and also where to take the trade in order for you to get consistent pips and be profitable every single day and every single week. Now, without further ado, let me show you my Fibonacci settings that I have. Okay, it's pretty much similar to everyone else's Fibonacci settings. We have a 382 marked in red. We have the 61.8 marked in red. These are the strongest levels of the Fibonacci tool. Okay, these are the strongest levels, and this is the levels that the market really love to touch. Okay, on the upper side we have TP1 and TP2. Now the TP1 is 0.272 and the TP2 is 0.618. So these are the two TPs that you will use for a buy opportunity, and very easy. Now that you know the Fibonacci levels, let's look at a quick example on how to set the Fibonacci and where exactly to wait with the Fibonacci. If the market starts to make a push to the upside, this is where swing traders and intraday traders are very interested. Why are we interested? Because we know after a push to the upside, we need to see some sort of pullback or correction or retest, as they call it. You could call it anything you like. The market needs to make a retest because the market cannot always keep pushing to the upside. So the market needs to make a stop and then start a small correction down. Okay, so when the market starts this correction, this is where we are interested. We will take our Fibonacci from this low over here to the high over here, and then within that we will be able to see exactly where the market is going to push to the upside for the next impulse or for the next move to the upside, because in this market we're in a bullish trend. So let's take our Fibonacci from the low to the high of the impulse. Okay, once you have done this, you'll be able to see that the levels of the Fibonacci, the market will love to come and respect the 61.8 and also, like I said, the 382. So it just depends on which kind of structure you have on the left hand side of your chart. So it's always good to look left and make sure that you have some good structure lining up with these levels, and it will make it a much better probability trade for you. Okay, and if the market does come into this area, when the market does come into the 61.8 area like in this example, then we are very interested in looking for a better and a bigger push to the upside to complete the next impulse or to complete the next higher high, because we have a high over here. So what we're looking for is we're looking for the market to complete a nice higher high and reach at least our TP2. Okay, so this is how we are going to look at it. I will show you guys a quick live chart example so that you guys can understand a little bit more easy how to use the Fibonacci tool. So let's look at USD Japanese yen from a daily perspective. Now from a daily perspective, if you guys have a look at this impulse to the upside here, this is a very big impulse. So what we need to do is very simple. We take our Fibonacci from this low over here to the high over here. Once you've taken your Fibonacci from the high or from the low to the high, you'll be able to see the different levels that the market love to touch. Now let's do it for you, live example. As you can see, the market now has respected this 382 Fibonacci on the daily time frame. Okay, you can see this. It is very simple, easy, and it's effective. Okay, the reason why it respected this is because if you look left from your 382, you can see that we have a lot of structure in the market. We have nice support here, we have nice resistance here, we have nice resistance here. So this means that there's a structural level in the market, and that's why the market respected this for the next push to the upside. And you can see the example that I'm giving you now, it already hit TP2, which was a very nice trade. You got all the way up here, very, very nice trade, and it was very, very easy. Okay, so this is how the market will want to work day in and day out. The market, if it does a impulse to the downside, it will do exactly the same thing. We need to wait for the impulse to stop. We need to wait for the correction to start. When the correction does start, then we are interested in shorting this pair or selling this pair. So we take our Fibonacci the same as before, from the high to the low, to sell, high to low. Okay, once we have done that, then you can see that the market is now retracing close to the 61.8. So what do we do? Very, very simple. We will wait in this area, monitor that price action, make sure that the market reaches to the 61.8. Look at your structure on the left. If you have good structure on the left, it means you have a bigger and a better probability trade. So we wait. Once we find our entry, we will take the next impulse to the downside, because the market will need to move in waves. Every single day the market will move in waves. So if you can catch these waves, then you have a very good probability trade. As you can see here, I pulled my Fibonacci from this high over here to this low over here. The market respected the 0.50. Why did the market respect the 0.50? Because there was a very good structure level here. Previous support, now turned resistance. So we have very, very easy way to find out exactly what the market is doing. If the market is making good trends up and down, correction impulse, then we have a very good possibility that we can take a trade with a very low risk and high reward. As you can see here, I took my Fibonacci from the high to the low. The market respected the 61.8. Why? Because we have previous support here, now turn resistance here, and the next impulse to the downside. So the market will just keep carry on and on like that. Now, if you guys enjoyed this video and it was very educational for you, and if you guys did like it, I would like to ask you guys to please hit the like button, hit the share button, and also don't forget to subscribe to my YouTube channel. I also have a Tradingview account on Tradingview, so check that out. I will leave it in the link below. Have a great trading week, and goodbye.